Welcome to Smart Swing Traders. Please subscribe to keep up to date with our upcoming video from our channel. In the nifty energy sector, companies with a moat, sustainable competitive advantage, typically have strong market positions, high entry barriers, or regulatory advantages. Here's a deeper look into the moat stocks in the Nifty Energy Index, including their business models, advantages, risks, and future growth potential. 1. Reliance Industries Limited, RIL, moat factors, vertical integration. Operates across the entire energy value chain, exploration, refining, petrochemicals, and renewable energy. Market leadership, largest private sector company in India with dominant positions in multiple industries. Diversification, strong presence in telecom, geo, and retail, providing stability even during oil price volatility. Risks, high dependence on crude oil prices, competition in the renewable energy segment. Future outlook, aggressive push into green hydrogen and renewable energy, expansion of geo and retail segments to reduce dependency on fossil fuels. 2. NTPC Limited, National Thermal Power Corporation, moat factors, government support, India's largest thermal power producer, benefiting from sovereign backing, stable revenue model, long-term power purchase agreements, PPAs, with state governments ensure steady cash flow, operational efficiency, one of the lowest cost power producers in India. Risks, dependence on coal, which faces increasing regulatory and environmental pressure, rising competition in the renewable energy sector. Future outlook, investing in solar, wind, and green hydrogen projects to diversify away from coal, increasing focus on power storage and grid modernization. 3. Power Grid Corporation of India Limited, PGCIL, moat factors, natural monopoly, government-backed company with a near monopoly in India's power transmission sector. Regulated returns, revenue is largely protected by government regulations, ensuring consistent profits. High entry barriers, capital-intensive nature of the business prevents new competition. Risks, regulatory changes that could impact tariff structures, shift toward decentralized power generation, rooftop solar, could reduce transmission demand. Future outlook, expansion into smart grids and digital transmission networks, strengthening transmission networks for renewable energy projects. 4. Indian Oil Corporation, IOC. Moat factors, market dominance. India's largest oil marketing company with over 50% market share in fuel retail. Extensive distribution network, 34,000 plus fuel stations across India. Government support, key player in India's strategic energy reserves and LPG subsidies. Risks, vulnerability to crude oil price fluctuations. Government price controls can impact profitability. Competition from private players like Reliance and Naira Energy. Future outlook, expanding into electric vehicle, EV, charging and hydrogen fuel infrastructure. Increasing refining capacity in petrochemicals business. 5. Oil and Natural Gas Corporation, ONGC. Moat factors, largest oil and gas producer in India. Accounts for approximately 70% of India's crude oil production. Government support, strategic role in India's energy security. Long-term energy demand. As India remains a net importer of crude oil, ONGC plays a critical role in domestic production. Risks, declining domestic oil reserves and aging infrastructure. Volatility in global crude oil prices. Transition to renewable energy could reduce long-term demand for fossil fuels. Future outlook, expansion into deepwater and shale gas exploration. Investments in renewable energy and green hydrogen. 6. Adani Green Energy Limited, AGEL. Moat factors, largest renewable energy player in India, focused on solar and wind energy. Long-term PPAs, ensure stable cash flows. Government support for renewables, benefits from India's aggressive push towards clean energy. Risks, high debt levels due to aggressive expansion. Political and regulatory risks related to Adani Group. Competition from global renewable energy giants entering India. Future outlook, expanding its capacity to 45 gigawatts by 2030. Potential entry into green hydrogen and battery storage. 7. Tata Power Limited. Moat factors, diversified energy portfolio, operates across thermal, hydro, solar, and wind power. EV charging infrastructure, leader in setting up EV charging stations across India. Strong parentage, backed by Tata Group, ensuring credibility and long-term support. Risks, slow execution of renewable energy projects. Dependence on regulatory approvals for tariff hikes. Future outlook, expanding solar power capacity, strengthening distribution business through smart metering and grid modernization. Conclusion, which moat stock is the strongest? It depends on investment goals. For stability and government backing, NTPC, Power Grid, ONGC. For growth and renewable energy play, Adani Green, Tata Power. For diversification and market leadership, Reliance, IOC. If you want to open a demat account, I have given a link to Zero Ducker in the description through which you can open an account. Views and opinions mentioned in this video or comments in the past are present under the banner of YouTube channel, Swingtrader. It's meant for educational purpose only. Investing and trading in the stock market are subject to the market risk. We are not SEBI registered analyst or NASDAQ registered analyst. Consult your financial advisor before taking decision. Swingtrader is not responsible for your profit or losses. The sole purpose of this content is for knowledge and awareness of the share market, so you agree that we are not responsible and not liable for any legal action. Hi friends, if you like this video, please like, comment, subscribe and share to your friends. Thanks for watching.